Hi, I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgren, founding CEO at Lundgren's Capital.
Welcome to Sound Economies with Mel and Peter, an East Meets West podcast by Lundgren's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. Hi, Peter. How are you doing today? How's the work week been for you so far?
I'm doing good, Mel. Thank you. And the work week is it's extremely busy, and that's good. And it's actually concerning our alternative investment funds. We are having a lot of conversations with potential investors. A lot of attraction has been gained again on our defense fund. It is moving very fast also for our investments we have in the fund. So it's actually amazing.
That's good.
Yeah, even for a sort of a person like myself who has been let's say a couple of decades in the market. So it's pretty interesting actually. So that's fine. It's excellent. We can't complain. What about you, Mel? Tell me, how's life, Manila?
Oh, in Manila, it's been a colorful life for us here. A lot going on, but as far as work, we very recently published an article from our one of our contributors here in Asia. It's regarding the Japanese central bank, and we'll actually be covering Japan today in our podcast.
Yeah,
So a lot to
yeah.
discuss as well. So we have a long list as usual. In this episode, we'll be discussing the very hot of the press minutes of recent Federal Reserve meeting and where we picked up hints about their next moves. A
Mm.
$250 billion stimulus that's in the works for Japan. A recent decline in among Chinese equities. We'll discuss more as to why. And finally, we are gonna look into the political chaos unfolding in France, which has been triggering fears of a government collapse. And of course, as usual, we look into the global outlook and see our house view and whether it has changed or evolved.
Yeah.
So let's get right into it, Peter. Um, we mentioned the Fed. What do we think about that minutes of the meeting?
Yeah, as basically it's a big thing, yeah, because it's the Fed, the U.S. Fed, U.S. central bank, the biggest central bank in the world, or most powerful at least. Not that we should spend a whole lot of long time on it, but just the minutes that came out was released for 2 days ago. The way they confirm that they are not busy now in lowering the interest rates, and it's basically what they're saying in the minutes, yeah.
Mm-hmm.
So this is just another proof or sign, depending on how strong we take it, of the changed interest rate environment that the financial markets are exploring and what investors are facing. And again, we simply won't see the many rate cuts in the short end as expected that could sort of have um, taken the stock markets higher
Mm-hmm.
globally as we expected. So that is sort of one thing. A bit of steam is taken out of this positiveness. But the other thing is also that means investors will need to look closer into corporate earnings,
Uh-huh.
also a bit sort of the macro trends, of course, all the classical factors that we are looking at when we sort of try to predict where the stock markets are going. So again, just a confirmation, but it is a bit important. Small pieces, small important piece. What
For
Fed is
sure.
telling us now, what we observe and what we put into our own library in our decision taking. But you have some big deals on the plate. Mel, tell us.
Right. So what was interesting that I saw this week is also a pretty substantial stimulus package that's being prepared in Japan. So it's seen to amount to about $250 billion. So that's about the 5% of the GDP, and that's
That
pretty
is
strong. It's a,
yeah,
it's a big
that is significant. Yeah.
it's trying to tackle several things in one go. So first, it will give direct subsidies to low income households. It's said to equip them with extra money to cope with higher energy prices and higher cost of goods because the weaker yen is driving up retail prices domestically. So the amount is about 30,000 yen per household. Or so that roughly translates to about $200 per family. And
Yeah.
there's also this move to increase the tax-free exemption or tax exemption salary level.
Yeah.
So put together, it's expected to raise disposable incomes, increase domestic spending that will ultimately, hopefully, stimulate GDP growth in Japan. And I've just read that the Bank of Japan's governor is hinting at another rate hike. So pretty
Yeah.
divergent central bank while the rest of the world's waiting for the Fed and everyone else to cut. Here comes
Mm.
Japan just trying to get out of negative interest rates. And that's actually what our contributor from Japan included in the article that we published just today. So
Mm.
a longer discussion is available on the Longines Investor Insights website. But what's very curious about the stimulus package, as generous as it is of course
Mm.
it's gonna need or it's gonna generate even bigger public debt. And
Yeah.
Japan isn't necessarily in a good position right now. Their debt to GDP level is at 255%. So that's
Mhm. Yeah.
freakishly high. Yeah.
Yeah. It is interesting. It's worrying. There's a lot of things to say, and we should also look into the wording around this stimulus package. As first of all, it should lower the inflation,
Yeah.
and that is a play because it's like they have not read page number one in how to run the public finance in the country. Yeah.
Mm-hmm.
So pumping more money out in the system is, of course, in generating inflation. It's not taking inflation out. But what they are trying to, also what you mentioned, is that they will subsidize energy prices, and that will, of course, lower the inflation. But it's a
Right.
play. As it's sort of it's a play. The net calculation so far is that you should lower inflation with 0.3%. Yeah,
0.3,
but
yes.
it's a wild guess if it happens. Yeah.
Mm-hmm.
Um, and we're also seeing, as you mentioned, that the government is handing money out, simply physical cash, to the low-income households. Yeah. So this is their desperate actions to get the economy running. We've seen it before. Interesting, as we have covered a couple of times, it's going on in Thailand as well. Now, Thailand is not an old economy; it's an emerging market economy, but
Yes.
it is signs now of some areas having difficulties in getting people to consume, yeah?
Yes, correct.
And handing out money is just short term. What is the problem here is there's no reforms of the Japanese economy. It's we are talking about an
Right.
old school economy and old economy. We call it mature. With the IMF, they call it an advanced economy.
Advanced, yes.
Yeah, I'm not so as a, a bit. I'm not so sure it's so advanced. Yeah, it's losing out there. So this is it's of course interesting, and it's extremely interesting for the stock market to see if this sort of can boost stocks.
GDP.
But it is much more sort of worrying what they're doing, trying
Mm-hmm.
to buy some. To please the voters, reform work would have been more appreciated. And again, towards the central bank, this is a natural reaction from a central bank. What they should do
Correct.
if the government goes crazy on the fiscal on the fiscal budget, then a sort of responsible central bank will counteract with raising interest rates to take steam out of the
The inflation
economy,
as
basically. Praise to the central bank. We are worried about the Japanese outlook, basically, but there could, of course, be a short-term uptick in activity and whatever happens. Yeah.
the hope is to boost Japan's GDP growth by 1.2 percentage points. So
Yeah,
that's pretty
yeah,
substantial if it
it
happens,
is.
considering
It
they're at
is.
point 3.9. So yeah,
Yeah,
let's see if
it is.
it translates.
It's probably will, yeah, and that could bring some cheer short term. Yes, surely. Fantastic, but interesting. Very, very big thing actually.
Mhm. Elsewhere in Asia, actually, Peter, let's jump to China this
Yeah.
time and the stock market. So we've seen the past few days, with the exception of this morning session, that Chinese equities are down for 4 or 5 straight sessions since last week.
Yeah.
It's largely due to weaker tech profits from the third quarter that's been reported, although
Yes.
it has improved this morning, but it's also largely because it's the markets are reacting to incoming President-elect Donald Trump saying that the
Mhm.
U.S. will surely impose additional tariffs on Chinese goods on day one of
Yeah.
assuming office or of his return to the White House, which is in about a month and a half. Yeah, so it's a pretty swift action. I mean, he has alluded or he has
Yeah.
repeatedly said it in campaigns, and then when he won the November
Mhm.
elections in the US. So it's really sending jitters. And what's more surprising is, apart from China, apparently he also plans to impose new taxes on Canadian and Mexican imports. He's saying it's
Yeah.
a measure to stop drug shipments to the US. I mean, illegal drug shipments. So it's
Mhm.
quite of another jolt to markets. I
Mhm.
think a lot of observers are thinking, oh, it will take some time because he still needs to
Mhm.
draft an executive order to make it happen. And then here comes the
Yeah.
news that, oh no, it's on day one.
Yeah, there's no doubt he's hammering around that right now, yeah, and left wing and right right wing. In focus, we know actions against China is on the agenda, and talk about the Chinese stock market. Yeah, there's no tailwind right now. Yeah, it's a bit sort of the growth numbers from China is they are sort of slightly below expectations. Yeah, and
Right.
international investors in general, getting a bit nervous about how tough Trump will be from, as you say, day one.
Day one, yeah.
Um, yeah, it's a bit headwind-like, but it's not sort of any panic, and natural that Chinese stocks maybe react slightly negative, though we are not concerned. What we are sort of looking out for are small hints, signs from different comments out of China about what could be seen as countermeasures, yeah, to support Chinese exporters, Chinese domestic economy. We see it as likely there will be some countermeasures. We would be disappointed if the Chinese government just sort of say, okay, now Trump is in the office and there's much higher tariffs and we don't do anything.
Mm-hmm.
Um, then we would be disappointed. But that is basically the states right now, where our disappointment sets in. So
I guess
that's
the question, Peter, is China is has just a few weeks ago announced their stimulus package. And of
mm,
course, there's always that question of, is that enough as a countermeasure? Will they
yeah,
need more? This
yeah,
early, I'm seeing, some market observers saying, oh, they want more. But
yeah.
can China already can China still afford it? Considering they
Mm.
also recently floated a sizable package as well.
A good question. Can the governments continue to afford all the initiatives around the world? Yeah. Also they're bailing out all the time. Um, China remains one of the countries they can afford. Yes, they can.
Mm-hmm.
Um, and we would be disappointed if they don't sort of come up with some sort of counteraction. That is, i.e., also saying we expect them to to write a check somehow, and can they afford it? Yeah, they can better absorb it than many other countries. So far, our view, but we are attentive. That is for sure.
Yeah, more than ever.
Oh yeah.
Let's go
So
to your side of the world, Peter. So
yeah,
you after Germany, here comes France with their own political drama. It's pretty wicked, right?
yeah, it's heavy stuff right now these days. And yesterday, uh, sort of things I would say almost domestically exploded in France. We have so we have the situation after the latest election in the early summer in France that there's a minority government in France, and that is unusual for in France. So normally they find a
Mm-hmm.
grand coalition, and then there's a majority government, and that is basically very close to the same political observance that the French president would have. So that is normally how the political scenario is in France, and but now we have the situation with President Macron, who was re-elected, but he's not particularly popular. So his own party lost a lot of seats in the last uh, parliament election. All the seats they went out to the left part and the right part of the parliament. So it has not been possible
From a
to form a
majority.
government, yeah, a majority government. Basically, it's no surprise that they are sort of. We all knew that when it then comes to a new budget for 2025, that will probably be something that is sort of almost driving to the wall. It will fail basically.
Mm-hmm.
Could be no surprise. But yesterday it turned out that there might be no approval of the budget. But there is this particular law in France, so the prime minister can force it through
Right.
against the parliament. But that means that there will be a confident vote. So where we are now is a new budget with big budget cuts as a savings,
Right.
really heavy cost cutting, and that's is the left side of the parliament is against it, as a very much against
Yeah.
it. Marine Le Pen on the right side, they might be willing to support if there are changes. Right now, they will not support, and that means that it will be forced through. But the confidence vote very much would probably mean that it will be a no, as a no confidence, basically result. The reaction yesterday in financial market was interesting in the way that it really happened very fast that the interest rate spread between France and Germany and the government debt widen out. And you say, okay, what does 0.9% mean? Yeah, basically not a lot, but it's the biggest difference in 15 years. So the market reacted very fast on these negative outlooks, and that is actually what I observe. It can be no surprise that France is sort of hitting the wall, yeah, in terms
Uh-huh.
politically. But they are also in bigger terms hitting the wall economically, as France has for recently been downgraded by the credit agencies again, and it is the outlook is that they will lose more in their credit rating, and that is again a consequence of having 30 years, 3 decades with a public deficit. It is so unhealthy for a country. The debt level is very high. Every year they move in the wrong direction. They miss their own budgets extremely every year. So everything is a disaster about France in terms of the economy. But again, it's actually no surprise. We can all see it. And then we see this very strong reaction. And that shows one thing for me, that the market is more nervous than normal. So there is a much higher nervousness level, so to say, than has been, and a bit surprising maybe. What we see these days could be the first sign of a bigger crisis. But it doesn't have to develop into a bigger crisis because as a politics, economy, economics, and also the financial markets are moving every day. So there could be
Right.
other metrics coming against it, positive sort of developments that take steam out of the current nervousness. So it doesn't have to develop into a crisis, but these are the first sign of a bigger crisis in France, and this is the second largest economy in the Eurozone. And we simply need to take into consideration that right now Germany is melting down. Yeah, so they are
Right.
getting so many people laid off in the industry in Germany. As is every day, it is news about people getting laid off, and it is not 10 or 20. ThyssenKrupp the other day came out with 5,000. Yeah, and totally they will reduce with probably 11,000. Ford Motor Company, they will reduce. Also, Volkswagen. It is a deeper thing in the heart of the Eurozone. And in addition, to make the French story real French, there is a domestic political play going on as Marie Le Pen is in a trial for misusing of money in the European Union.
Mm-hmm.
And she is making a heavy infight to get, it's hard to get out of it, but it's to get the, how to say, the damage reduced and to support the current government in the budget for 2025. It could be a part of the unofficial deal that she will partially escape some of the worst consequences for her on that trial.
I
But
actually came across an article that compared risk premiums towards French government bonds to like Greece. Like it was
mm,
closing in on the rates
yes,
that 10-year bonds were 10-year bonds issued by the Greek government uh is fetching. So that's quite extreme. Yeah, you're right. Because that's you would think that would be such a poles apart in terms of economic development and maturity, but apparently here
uh,
we are in just a few days.
yeah, and it's the speed of the development that is as the sort of the
Mhm.
explosive development. That is actually the concern for us, Mel. We of course get confirmed in having underweight in Europe when it comes to asset allocation. Uh, that doesn't change. On the contrary, we are very firm on having a majority of the allocation outside Europe. Yeah.
Mm-hmm.
But
So
that's taking us to the next topic, maybe.
yes, of course, as usual, we review our global outlook in every podcast episode that we have. That you got it started already with our underweight position
Hey,
or towards Europe, but we as far as Asia is concerned, we remain overweight here. We like developments here. We see
mm,
some risk, of course. We always anticipate and monitor, but yeah, the growth remains here. News about stimulus measures are always welcome. Although, of course, we also look beyond that detail and see how they're
mm,
funding it. So, as mentioned earlier today, debt funded stimulus is something to watch out for, especially for economies with really high debt exposures.
yeah.
How about towards the US and the Americas, Peter?
So we still see the market as predominantly sunshine. Even some swings in Asia is at a high level, so to say. They're not high growth level. We should not forget that. Trump is on the agenda every day. Yes, he is. Um, can he reverse the trend in US less than we believe is our trust? We still see the US economy is doing okay. The US stock market um, okay. We still see the upside right now. As mentioned, almost mentioned the past, I don't know, months, 1.5, there are clouds on the horizon for investors uh, around the world, and we see maybe more clouds, but still, it is not enough to make us feel uncomfortable.
Mm-hmm.
The only change we have made after the U.S. Election was to say, okay, we move a bit sort of towards the middle of the duration, a bit
Mm-hmm.
more neutral on duration when we talk about fixed income. that's done, and we basically like also non-listed investments in companies as a venture capital, private equity. So there we are actually more happy than maybe in
Mm-hmm.
the listed market. So all in all, we see the sunshine in the world for investors as usual.
That's always encouraging, Peter. And yeah, that's all we have for this episode. Thanks for sharing your views, Peter. As usual, very informative.
Yeah, pleasure being here together with you, Mel.
And thank you to our listeners for tuning in. We'll be monitoring global developments and we'll share what's interesting in the next episode of Sound Economies, Mel and Peter on the Global Financial Markets, a podcast by Longines Investor Insights. Thanks for tuning in. For expert insights on the go, download the Longines Investor Insights app for free. For investors, we offer very exciting and high quality alternative investment funds, including our top rated Mutual China Fund. To know more, visit longinescapital.com.